Never trade without a stop loss. Here's why. Have you ever watched a trade go from green to deep red, all because you hesitated to exit? Every trader has felt that sinking feeling. The truth is, not using a stop loss isn't brave, it's reckless. And if you're trading without one, you're not managing risk, you're gambling. Let's start with a harsh truth. Markets don't care about your feelings. They don't care about hope. They don't respond to prayers. And they won't reverse just because you want them to. That's why a stop loss is your best friend in this game. It's not there to punish you, it's there to protect you. It's your shield against your own emotions, your insurance policy against volatility, and your safeguard against total capital loss. A stop loss is a predefined exit point that automatically closes your position if the price moves against you. It doesn't just help you limit losses, it also gives you mental clarity. When a stop loss is in place, you're free from the stress of watching every tick, free from emotional overreactions, and free to stick to your strategy. Let's say you bought Bitcoin at $60,000 expecting a short-term rally, but instead it starts dropping. If you had set a stop loss at $58,500, your loss would have been manageable, just 2.5%. Without a stop loss, you might panic sell at $55K, or worse, hold all the way down to $40K, hoping it'll bounce. That's not a strategy. That's financial denial. Great traders don't avoid losses. They control them. The difference between a professional trader and an amateur isn't how often they win. It's how well they manage when they lose. A well-placed stop loss allows you to live to trade another day. It protects your most valuable resource, capital. Now here's where it gets deeper. Stop losses don't just protect your money. They protect your mindset. One big loss can destroy your confidence and lead to a downward spiral of revenge trading, over-leveraging, and emotional decisions. A stop loss keeps your ego in check. It forces you to accept that you're wrong sometimes. And that's okay, because trading isn't about being right, it's about being profitable. Another powerful benefit? Discipline. Setting a stop loss ahead of time means you've thought through your plan. You've done the analysis, accepted the risk, and committed to a strategy. That's the mindset of a serious trader. Without stop losses, every trade becomes a coin flip, and that's not sustainable. Some traders argue that stop losses get hunted, that market makers push price down just to trigger them. And yes, that can happen in illiquid markets or low-volume altcoins. But in most major assets, that's not a reason to avoid stop losses. It's a reason to place them strategically. Instead of setting your stop at obvious support levels where everyone else places theirs, learn to hide your stop beyond key levels, or use mental stop losses if you're disciplined enough to act fast manually. Advanced traders also use trailing stop losses, which move with the price. Let's say you're long on Ethereum from $2,500 and price runs to $3,000. You could set a trailing stop $100 behind the current price. If ETH reverses and drops to $2,900, your position exits automatically, locking in profits. Trailing stops turn winners into protected capital. But remember, a stop loss only works if you actually use it. Too many traders set a stop, then cancel it when price gets close, thinking, "I'll just give it more room." That mindset destroys accounts. Stick to your plan. Trust your strategy. Respect your own risk tolerance. Stop losses are also a form of respect for yourself and for your capital. They show that you value long-term success over short-term ego. They're not about being afraid of loss. They're about refusing to let one bad trade wipe out weeks or months of hard-earned progress. Still not convinced? Let's go deeper. Imagine you have $10,000 in your account. If you lose 50% in one trade because you didn't use a stop loss, now you have $5,000. To get back to $10,000, you don't need a 50% gain, you need a 100% gain. That's the math of loss, and it's brutal. Protecting your capital with stop losses avoids putting yourself in that hole to begin with. The best traders in the world, hedge fund managers, algorithmic traders, even bots, all use stop loss systems. It's not a coincidence. It's a requirement. Risk management isn't optional, it's survival. If you're serious about trading, make stop losses a non-negotiable part of your system. You'll trade with more clarity, more confidence, and more control. You'll avoid catastrophic mistakes, and most importantly, you'll stay in the game long enough to actually win. So never trade without a stop loss. Not because it's safe, but because it's smart. It's the edge that turns discipline into profits. And in the long run, it might be the one habit that keeps your trading account alive when others vanish. In the next video, I'll show you the 3 most effective stop-loss strategies professional traders use, and when to use each one. Don't miss it.